Canadian Mortgage Weekly. My name is Sam Thompson. I am a mortgage agent in the Barrie Simcoe area, but serving all of Ontario. If you are familiar with Canadian Mortgage Weekly, typically I'm joined with Joe Bladdock, who is also a mortgage professional in the Barrie Simcoe area for over 10 years. Joe, unfortunately, isn't able to be with us this morning on today's episode, but I'm so happy that you're able to join us. It feels crazy to be doing episode 24 already, with a couple, rate announcements and other topical videos in between. But it's super exciting to be on with you guys this morning. Thank you for coming out and watching. If you're watching right now, just write a comment in, say hey, ask any questions that you have. Today we're going to be continuing our 4-part series of Spring into Summer. So if you've watched our episodes for the last couple weeks, you know that we've been going over a lot of typical renovations and improvements that happen in the summer. We kicked it off with how it would look adding a pool, a new fence, some decking to your property, and being able to refinance to access those funds. And last week, Joe ran us through upgrading some of the big ticket aging items, especially with COVID and we've all been home. I think in spring into summer season, we typically have to start looking at those big ticket items like your roof. You notice after the snow's gone that your shingles are curling, or maybe your furnace needs updating. So Joe took us through a lot of awesome numbers for that, and today I'm going to be going over what it looks like to add an entertainment unit to your space, and just upgrade some fun some fun improvements to your home living space. But before we jump into the episode today, I just want to chat a little bit about some of the news that we've been seeing in the real estate and mortgage industry. Joe and I usually go through some big things that are catching our attention, or that we're hearing. Clients are reaching out to us to see how certain things affect them. So just starting off, if you were able to catch yesterday's quick announcement video, the Bank of Canada met and set an announcement for the interest rate. And the result was that it is staying the same as what it has been in the past. So they meet 8 times a year, the Bank of Canada does, to announce the new interest rate, whether it's rising, staying the same, or it's going even lower. So we're seeing that it's staying the same, which is good news for anybody who has really capitalized on a variable rate mortgage, because we're going to start seeing we're going to see those rates continue to remain low. The Bank of Canada also was saying that they're still, keeping at this point on track with the rate staying the same until mid-2022. So this is a great time to get into a variable rate mortgage if, you're looking at moving in a few years, or you think you might move. The penalty is usually quite a bit softer from a variable rate mortgage compared to a fixed rate, as well as you can really capitalize on the savings that are available with this low rate. I think for most of our lenders, it's either 1.45 or 1.55% on a 5-year variable. So that's quite a bit of savings. So it's really exciting to hear that the Bank of Canada has left that rate unchanged and the same rate. Also, big news that took place last week, or actually maybe 2 weeks ago now, but we're starting to see more and more people talking about it, and a lot of people living the effects of the stress test update, of course. So on June 1st, the official launch happened for the stress test, which increased the qualifying rate from 4.79 to 5.25. So this is standard against all mortgages, not just insured, but uninsured as well. So it definitely has affected a lot of our clients. Especially this is important if you have even been pre-approved in the past and you were pre-approved at a qualifying rate of 4.79. It's important that you either reach out to us or whoever your broker or lender is, to see what your new current numbers are, because we really don't want you guys to be looking for a house price that's based on the old qualifying rate, and then you end up maxing out. So it's really good if you've chatted with us, earlier in the spring when we were still at the lower rate. It'd be awesome to chat with you about, where you're qualifying now with the new stress test. And of course, with the stress test, we are seeing, a further increase in cosigners being a normal part of any purchase, typically for first-time buyers. But we are really seeing that the bank of mom and dad, as a couple articles I've read like to put it, the stress test doesn't help that at all. It really is making even more people need to at least have a cosigner or even gifted down payment come from their parents. So that's been on the rise. So that's another important thing. If your household income, as a first-time buyer especially, isn't quite high, it's good to think about and keep that option available if you think you might need to add a cosigner. The biggest thing you can do is just start the conversation to see if that's something that a parent or guardian has considered, or if it's something that they're willing to do to help you get into the market. I mean, I know a lot of first-time buyers I chat with, they're already paying rents, that are quite high. So a mortgage payment in most cases isn't too far off from what they're already paying in rent. So it's more just to help them get into the market. And a great lender to work with. If you look back in our videos when we interviewed and had Barry Ray on with us, Barry Ray has a lot of different mortgage options that are available to you. If you're looking to tap into the equity as a parent of a first-time buyer, to be able to help gift them with some down payment, taking it out of your equity that you have in your home, or something in that form to help them out. But we are seeing a lot of families having to co-sign with each other in order to get it to get their first purchase into the market. But that's really the biggest things that we've seen over the last couple weeks in the mortgage industry. But I'm really excited today to be able to go through a presentation on what it would look like to refinance in order to add a entertainment space. I know for myself, this room, this office here has become where I'm at every time. And I look around a lot and I think it could use a lot of improvements. I could, add some cool things. So I'm sure there's a lot of buyers out there, or sorry, buyers, homeowners out there that when they purchased the place, maybe it had an unfinished basement, or the basement was finished, but it was just really outdated, and it's become the den, as we used to call it, at my house. So a lot of people, I'm sure, in this time of COVID, when they're at home, are looking to do some upgrades. And I'm just going to be chatting about how you can get some money for those upgrades, and also how you can save some money in the process and have it all consolidated into one payment. So before I go ahead any further, I will just quickly jump right into my presentation here. Alrighty, so spring into summer. This is an awesome picture. I love it. It's got the bar, it's got the fireplace, the TV, new flooring. It looks like everything looks really, really fancy. So again, part 3 of our spring into summer series on renovating or adding to your entertainment space. So why refinance? So it allows you to use the equity in your home to pay for all of the upgrades. I mean, a lot of people, especially in COVID, you've had to use some of your savings to keep up with, maybe bills or payments that are due. So you don't necessarily have maybe the savings that you had a year ago, or just not enough to complete the whole project. And consolidating debts at the same time is really a big thing, because sometimes when you're going through COVID, and maybe you've used some of your savings on using some of your savings on some of those debts, if you don't have enough, and you have to put more on a line of credit or more on your credit cards to help support yourself, doing this refinance and adding the upgrade, you can also throw that debt in as well and reduce the interest that you're paying, because typically, a mortgage is going to be a lot better than a credit card, just making those minimum payments and accruing interest on those credit card loans. And the other benefit of using as just one monthly payment is it increases the cash flow because you don't have, money going to four different places each month. It's all going to one place per month into your mortgage, which is now consolidated all of your debts and all of the money that it costs to do these renovations. And it also can secure a lower rate. It's really important to keep an eye on, what the rates are, especially over the last year and change. We've noticed super low rates, which has been awesome because we've processed a lot of refinances, especially last year. And the amount of savings that people had after they had refinanced, even paying out a penalty, a lot of the times it was worth it to break their mortgage, secure for a lower rate because they were saving month over month in just mortgage payments because the rate was so much lower than what they had currently locked in before. So why would you add an entertainment space? I mean, beyond the added value of an entertainment space, I'm a big movie and TV buff myself. My Netflix has had, exponential use over the last year. So having a space that would be, help facilitate entertaining people, entertaining your family, really getting some quality livability out of your house is really important in this time. Um, so again, it allows you to further enjoy your home. A lot of people working from home are looking to add entertainment value to their home. As hopefully this Friday things are going to start to open up and we'll be on the sunny side of life again. But for many, COVID, you can't really go out. So it's definitely something that I think a lot of people are considering, especially if they have an unfinished basement or even a basement that is a little outdated. It does add value by updating your current space, and it gives purpose to the space. I know a lot of basements remain unfinished. There's maybe a laundry machine in the corner and it's just boxes and storage, but why not finish the space and actually be able to use it and really capitalize on the full square footage of your house, not just, the main floor and the basement's just, guests aren't allowed in there. So things to consider if you're looking at refinancing in general, as well as looking to refinance for any of these upgrades. So you'll have to figure what your home is worth. So that's something that we can help try and estimate for you as well if you reach out to us. You'll need to know what your current mortgage balance is, what the rate is, and what your payment is, because especially if you're going to be breaking your mortgage and paying a penalty, we want to know that you're actually going to get lower payments, hopefully, a better rate. And we also have to consider what your mortgage balance is compared to the value of what your home is worth. Because if we do a refinance, we will have to pay out the existing mortgage. What are the costs of the upgrade? So again, in this episode, we're going to be covering off the costs of consolidating some debts, as well as adding an entertainment space in the basement. And are you consolidating any debts is the next point. And then what rate and term you wish to change to. So again, if you were in a fixed rate and you're seeing that variable is low, it's scheduled to remain low until mid 2022, and you want to jump in so that even if you do want to refinance, a year from now or move a year from now, you'll have a lower penalty, as well as term. We can customize the amortization period to lower your payments, or we can try and shorten that window if we can as well. So there's a lot of things to consider when you're looking at refinancing. So let's jump in quickly to a case study. So here we have Joe and Sue. They are an amazing couple who purchased their home in 2018. They got it for $420 using 10% down. So including the mortgage insurance premium, because it's under 20% down, their total mortgage they were repaying was $389,718. So the rate at the time wasn't too bad. It was 2.49%. So monthly payments they were making were $1,832.35. So that's pretty standard. It's not super far off to what we're seeing today. So they got a pretty good rate. But now looking at it, their home is worth $570,000 approximately, and their mortgage has been paid down to just over $350,000. So they've decided, we have all this equity in our home. We've been in the same home for since 2018. We're looking at staying here maybe another 5 years, maybe another 10 years. So why not upgrade the space? So they're looking at refinancing, and they've reached out to their current lender. They've discovered their penalty to break the mortgage would be approximately $3,000, and we can estimate legal fees to be approximately $2,000 to complete the refinance. So their home has an unfinished walkout basement. So again, it's that space that is more of a seasonal room. It's just got, your extra winter boots in the winter. I know that's an issue that, some US states, when you're looking at housing videos and stuff, they don't take into account the seasons. But in Canada, I know our basement's usually full of winter boots, winter coats, all of the seasonal things as life changes. So they want to finish that basement. And they also want to add a hot tub outside of the walkout, so that they can have sort of an indoor-outdoor entertainment space, all within, a close proximity to each other. So they're going to upgrade their basement into a finished entertainment space. So that incurs new lighting, new audio video system. Maybe they're going to put a projector in and a new sound system, as well as a gas fireplace. We're going off a lot of what that picture at the start was. They're going to add new flooring as well as a bar. So I don't know about you guys, but that sounds like an awesome upgrade, and I might consider doing it myself. So the approximate cost for the hot tub is around $6,000. They don't need a huge one. It's just Joe and Sue that are living at the house, maybe a few friends. And the upgrades to their existing basement will cost approximately $65,000. So in total, we can give a rough estimate that this is going to cost around $71,000 for all of these upgrades. And they're thinking, you know what, we're already getting all of these upgrades. We're making all these awesome changes. Why not pay off our line of credit that's sitting here in our bank that has a balance of $15,000 on it? So they're going to throw that in as well. So let's see how that actually works out for them. So in total, to add the line of credit payment, doing all of the upgrades, the mortgage amount, the penalty, as well as the legal fees to do this, the whole total refinance cost is going to be $447,080.34. So their new mortgage they're going to sign is for that exact amount. They're going to go with a variable rate because they're seeing, it's actually quite a bit lower than a fixed rate. Even if it jumps up, it's still going to be at, our current rates we're seeing are hovering around 2%. So really they want to maximize on the savings, and they don't know if they want to live in this home forever. So they might end up moving. So they're thinking ahead that, hey, we can get a lower penalty, sign in for this variable rate. And actually what ends up happening is their monthly payments are $72.55. So not only do they have no line of credit anymore, they have an upgraded basement, they have added a hot tub, and they are re-signing and paying out all of their mortgage, legal fees, penalty, and they're actually saving just under $300 a month. So they've consolidated all their debts to one payment, plus their savings. So all of that cash flow, that can be, saved directly each month towards an emergency fund. It can even be saved up and added back to the mortgage as a lump sum payment. So it's really an awesome situation for Joe and Sue to pursue this project. And again, definitely reach out to us if that's something that you've been considering. If, during COVID, you've been thinking, why don't I just, we finish the basements. It gives a space for the kids to hang out so that, I know that a lot of parents that are doing either homeschooling or they're, have kids learning virtually these days. It'd be nice to have a space to send the kids to. So definitely, if that's something that you've considered, or you're just looking to refinance into a lower rate, maybe a variable rate, call us to chat about how we can help you with that process. You can either reach the office line at 705-238-3479 or email us at joe@joebladdock.com. We would love to chat with you. I think the most common one we likely get from these episodes that we do is actually people reaching out through Facebook, and that is totally fine as well. If you want to just DM us or write in the comments any questions that you have about the whole process, or how it would suit your specific scenario, we can definitely get back to you, chat about some numbers, and chat about what option suits you best moving forward. That is all I have for today's episode. Thank you guys again all for coming out and watching today's video. I hope that it was informative and exciting, and I hope that I was able to shed some light on the refinance process if you're looking to add some home improvements to your basement entertainment space, maybe adding a hot tub, some ways to really enjoy your home. So thank you guys for tuning in today. Write any questions or comments below this video, or share it with a friend that you think needs an updated basement to start the conversation. You can let us do that work for you. We'll work with them to really have a good party space for you guys to hang out at. But other than that, I will see all of you guys next Thursday at 11:30 a.m. for our last video in our Spring into Summer series. So I hope to see you all there. And thank you guys so much for coming out today. And I hope you guys have a great week.